Hello, I'm Bernard Hickey from interest.co.nz and welcome to 90 at 9. Everything you need to start the day in 90 seconds at 9 o'clock, starting now with news that the oil price has hit a record $112 a barrel overnight. There's been news that inventories in the United States have fallen, and also we're hearing of strong demand, particularly from China and India. It just doesn't stop. That's likely to flow through to higher petrol prices here in New Zealand, obviously. Also, we're hearing that Libor spreads have risen again to the levels they were at just before the Bear Stearns collapse. For those people wondering what is a Libor spread, it's called the London Interbank Offer Rate. Essentially, it's a measure of how risky it is for the banks to lend to each other. It shows that there's real nervousness between banks globally about their creditworthiness, and for that level to rise to where it was just before Bear Stearns shows that the global credit crunch is far from over. Back closer to home, we've heard from Alan Hawkins, the head of Sinotech. Those who have been around for a while might remember Alan Hawkins as the guy behind Equity Corp. Now he's back. He was in prison for a while, but he's back running a finance company called Budget Loans, which is part of Sinotech, a listed company. He reckons that more finance companies will fail in the next year or two, in part because of the slump in the property market. Elsewhere, South Canterbury Finance has bought the Nelson company, Fairfield Finance, about $18 million of assets there, and they're building up their Tasman Bay finance operation. Also in the banks, ANZ National has increased its 3-year, 4-year and 5-year fixed mortgage rates by 10 basis points, and that brings them into line with the ASB and Westpac. That was 90 at 9. I'm Bernard Hickey for interest.co.nz.